Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, September 11th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. I'm going to zoom into the daily chart right here and just go over the fact that we had a sell signal rejection. It was a short-term sell signal that played out last Friday, the big sell-off when we settled below this rising 1/3 speed line. We were anticipating this band of channel support that begins at 208.14 and ends at 198.03. This is a base of support that, if tested, able to contain selling on a weekly basis, which is to say really through next week. And once tested, the market anticipated to rotate upward to what is channel resistance presently at 246.39, or I should say some variation of this channel top, because if we were to actually fall all the way back to, let's say, 198.03, then your channel top becomes more like this trend line here in the low 240s. But right now we have the channel top at 246.39, and we are expecting this now over the next possibly 3 to 5 days, holding above 223.78. So 223.78 is a level you can buy on a day trade basis, anticipating 230.17 as an initial objective. I actually think we could reach 237 even today following the sell signal rejection. Holding above 223.78, I see 237 even as a 1 to 2 day objective. And if we push through 230.17 today, I see it as an intraday target. 237 even is a 50% upside retracement from that July high against the August low and can contain daily highs, but that's about it. If we close today above 237 even, we should see 246.39 tomorrow. I don't expect that latter scenario. What I think is likely to play out is holding above 223.78 over the next day or two, 237 even, and over the next 3 to 5 days, 245.18. 245.18 able to contain buying through next week, and from here we can fall back to some variation of this the channel bottom. Or I should go back to this chart here, some variation of 198.03, which would be a slightly different structure because it would be based on a different set of highs, but it does cover the same ground, does cover the same time horizon, which is about 4 or 5 weeks of play. So once again, we are bullish through the rest of the week and into next. Bullish short term only, expecting 246.39, where we can top out on a weekly basis and fall away from here back into really the 210s, 220s following that, because I'm really looking at this trend line as a possible 1 to 2 week objective. Now, if we were to close above 246.39, and this is kind of the big picture play where into later year we would expect 296.80 within probably 3 to 5 weeks of closing above 246.39. So the sort of swinging for the fences, longer term move, big picture likelihood would be a settlement above 246.39, expecting 296.80 within probably 3 to 5 weeks. Could take a little bit longer, where we might just top out through the rest of the year. 296.80 is once again you've got the 330s up here, and that's a different formation altogether, which is a 1.5 year channel structure, almost 2 years come this January. January, 331.93. This is a big picture play that would then be, I think there's another way of saying it, that if we close above 246.39, we're expecting 296.80 within 3 to 5 weeks, which is really the beginning of kind of a gradually narrowing zone, because 296.80 is rising at a steeper pace than this 331.93. So over time, that area kind of narrows, and it would be a 3 to 5 week objective were we to close above 246.39 in the coming week or two. And it is expected, over the next 3 to 5 days, by the end of next week at the latest, above 223.78. Now for the downside, if we happen to break 223.78, 216.58 is in reach. And if we close today back below 223.78, we would then be back to anticipating 208.14. That would probably be by Friday's close. I think settling below 223.78, of course, we'd no longer be anticipating these upper price points, but would in fact be anticipating 208.14 within probably a day or two by Friday's close. 208.14, once again, the beginning of a wide 10-point zone down to 198.03 that can absorb selling on a weekly basis, possibly into October. We can round back up again into the 240s within 2 to 3 weeks of testing that 198.03 formation. And finally, and it's not going to happen today, of course, but our next big picture play to the downside would be a settlement below 198.03. That would set up a sell signal that we would expect within 3 to 5 weeks to yield 158 even and dropping. And over the next couple of months, this formation actually converges with the 127.53 longer-term channel bottom. But closing below 198.03 would be a short play that you can hold for weeks on end, 3 to 5 weeks, into the upper 150s and dropping. And inversely, a settlement above 246.39 would be a position, would be an indication that you could, buy and hold into later October, 3 to 5 week play to the upside. But until then, it is sort of this range-bound market that offers these 2 to 3, 3 to 5 day swing trade opportunities that I've already articulated. We are above 223.78. The emphasis remains up. 230.17 likely today, beyond which 237 even is in reach and able to contain daily highs. And I think that's about it. I have an up pivot point here at 223.78 for good reason, which is to say that 237 even can contain buying on the way up to our anticipated. Now, I've got 246.39 here. I'm not quite sure why that is. We're not going to see 245.18 today. There it is. That's the updated level, 246.39. Sorry, if I've been saying this is not an updated chart entirely, that's updated, yes. This is not updated 245.18. That's actually 246.39. We're not going to see it today, but just know that if we rally into the mid 240s, you really need to focus on 246.39 and not 245.18. I think that pretty much rounds it out. I'm going to leave it at that for Wednesday's Daily Tesla Report. Please click like, share, subscribe. Check out wickedstocks.com. On Tuesday, we put out a stock pick on American Tower that is a global infrastructure for cell towers. It's posting a significant signal that we're expecting to play out into later year. You should check it out. You can for free by taking advantage of our 5-day free trial. I'll be back tomorrow with Thursday's Tesla, and you have a great day.